Okay. Again, everyone, are y'all ready to get into the meat and the potatoes of the party? Okay. Right now, again, as we said, we're gonna go to the basics because most of you have been trading, most of you started your demo accounts, most of you have been getting on the trainings for Epic, but we still have to go back to the basics to know the importance of what needs to be done before we can even start a trade. Remember, I'm going to ask a question and let's see who knows the answer to this question on this next slide. The number one cause of death for Forex traders is what? Put it in the chat if you know what it is. I need to see it in the chat. If anybody knows what the number, I'm not talking about you dying physically, but physically dying by losing all your money. Who knows what the number one cause of death in the Forex trader is?
Okay, we got a motion so far.
Okay. Yeah, I need you to watch the
Oh,
chart.
come on, everybody! Participation, class participation.
Come on, what's the number one cause?
It's no wrong answers.
That's right. That's right.
We got greed, bad risk management, lack of
Okay.
patience,
Okay.
lot size.
Okay.
Laughing my butt off lots.
Well, you know what? I'm not gonna say because the one thing the teacher always say that no answer is a bad answer when it comes to you losing your money. But the number one thing to cause all of us to be either to lose, because every last one of us on here has lost at one point. Some might won more, but we have all lost. And it's because of risk management. Sometimes we put too much into it instead of taking the time to realize what we're supposed to do. Risk management is absolutely critical component to any trader's overview strategy. We must learn how to take appropriate risks that won't let you lose everything in a trade goes bad. What is risk management in Forex trading? Risk is the potential for uncontrolled loss of capital in trading. Leverage in trading is a borrowed capital to increase the potential returns. And in the Forex market, high levels is to is up to 1 to 1,000. So traders can trade with more money than they have. Risk percentage equals risk capital. But there is a problem. There is high risk in trading. It's the cause of 95% of traders losing money. Remember, 95 of us on here has lost. 5% of us, and we already know who that 5% is, but we ain't gonna call his name out. But 5% of us are winners, but 95% of us are losers. We as traders need to know that risk management trading for Forex rules. Very important. Only trade money you do not need. Okay. Once again, only trade money. Don't trade your house. Don't trade your car. Don't even trade. If you got pets, don't trade the pet food because it is possible to lose all your trading capital. And secondly, because trading with funds you live on will add extra pressure and emotional stress to your trading comparison. Remember, your decision-making abilities and increasing the chances of making mistakes. Again, we've all did it. Some of y'all blew out your demo accounts, but guess what? You're going to learn today that you got to take that risk management in order for you to get where you need to be. The foreign exchange markets are volatile, so it's better to trade consecutive amounts while you're disabled, from your disabled, let me say, when you're disposed income, meaning the money that you're using to go buy cigars, the money you're using to go buy your wine, the money you're using to go pay your pictures. I'm just saying, that's just extra money that you're just using. You can be using that money to trade. If you can't afford to lose the money if you're trading, then unfortunately, trading is not for you. But again, remember, key things, money that you just got laying around. Go get them pennies, dimes, nickels, whatever, pick it up, go put it into your account and trade with that. Always use a stop loss and limit orders. Stop loss orders are placed on an open position to get you out of the trade in the market if the market moves against you. It stops the loss. We're going to get further into that as we go, but remember, some people can get in there and beat them, snipe them scalpers and just get in and get out. But if you can't and you feel that you got to go throughout the day and let that trade, make sure you put a stop loss because you don't want to wake up again and have one of them bad dreams. Hey, there are 3 reasons why you should set a stop loss and limit orders on every trade. It is just common sense to protect your downside. Your mindset is better. You can leave your trading screen knowing there's a degree of protection in place. The process helps your scene check the trade against your trading plan. This is a chart that will show you when you say above market and below market. Limit order to sell higher or low market. Stop order to buy at a higher market. Offers price bid, the spread. Always remember, Coach Cost and Coach Oliver will show us when we get ready to go to the charts. What do we mean by these things where you're putting in your what we call the ceiling and floors, and then you put in your stop order and your take profit. A lot of times they'll tell you to put a pending order or execute it. Some people might just put the stop loss and take profit and just put the trade in and not put a pending order, but we're gonna get more into that, like I said, later on in our trainings. Risk per trade. Another aspect in the risk is determined by how much trading capital you have available. Risk per trade should always be a small percentage of your total capital. A good starting percentage could be 2%
Shima, I
of your
told you to go
available
finish
trading
it, and
capital.
you got caught up in all this other
So
conversation instead of
can you
staying
somebody,
focused.
you just muted me too. Okay. So for example, if you have $5,000 in your account, but we're gonna start up with 500, most of you, the maximum loss available should be no more than 2%. With these parameters, your maximum loss could be $100 per trade. A 2% loss per trade would mean you could be wrong 50 times in a row before you wipe out your account. Again, you could be wrong 50 times. You might be wrong out of that 50 times one time, but you're going to be wrong 50 times and you're going to wipe the account out if you're not putting in the leverage that you think you have. This is unlikely to be the scenario if you have the proper system for stacking the odds in your favor. So how do we actually measure the risk? The way to measure the risk per trade is by using your price chart. The chart on the next slide is best to demonstrate the trade. Okay, I don't know if everyone can see this, but I want you just to look at this chart and study this chart and look at how the parameters are in here. And the way you measure your trade using this chart, you have to already determine the first line where you want to put your stop loss at. Okay, so now if you look at how the chart is set, I would, just as me, I don't know if anybody else would see it, but I would set my levels to 1.3534 to give the market room. And then I will put the stop loss at 1.3. Let me make sure I'm looking at this chart right before I mess it up. Because I know Kyle and Oliver looking at it saying, wait a minute, 1.3530. Am I right, Kyle and Oliver? Is that where you would put the stop loss at? If you were charting this? I just want to make sure I'm right because this is
1.3534. Yes, you're correct.
Okay. I wanted to make sure, like I said, I was looking at this on my own saying, okay, let me make sure this right before I even try to present it. Because you know what, you always got to get the correction. Okay, now a good place to enter the position would probably be at the 1.3580. Now see where I have to enter at, which is, in this example, is above the high, it's close to the triple bottom, which again, the difference between the entry point is 50 pips. If you count it, we have to count it. You always have to count your pips to know. I figure I would do it about 50 pips. Again, I was trading on a $5,000 account. We're not trading on $5,000 accounts. with your demos, you're trading on either you get 500 or the 1500. So you will put it in a different, size. Okay, so let's assume, okay, I'm trading a mini lot. And one of the pips in the mini lot might equal to, I'm gonna say $1. Then maybe my risk would be 50 pips. Then in each lot I trade, I will be risking $50. I'm hoping everybody's understanding this, because when we get ready to go to the chart, Kaz and Oliver is going to show you the difference. And right now, I don't have the lines, but it'll be able to show you when he put the indicators in, how you can tell and you can count your pips. So looking at this, remember, you could trade 1 or 2 mini lots and keep your risk in between $50 to $100, but you should not trade more than 3 mini lots in this. You know what? Because sometimes we think we're going to go and trade 5 or 6 lots. You can lose money quicker by doing that. So my advice to you is don't try to put in 5 to 6 different trades at a time. Again, we try to tell you, teach you discipline and tell you, pick your favorite pair and work with that pair and then move on as you mastered it. Okay. Forex leverage is a double-edged sword. Leverage, very important. One of the reasons why so many people are attracted to trading Forex compared to other financial instruments is that with Forex, you can usually get much higher leverage than you would with regular stock. When you first started hearing about Forex, most of you thought we were talking about the New York Stock Exchange. No, we are talking about exchange coming from foreign countries where you can put a penny in and get cha-ching out of it. As opposed to the New York market, you put in, you're going to have to wait and wait and wait and wait and wait. But again, you chose Forex, which is really good to help you get rich quick, only if you're making sure you're practicing your risk management and your leverage. Okay. While many traders have heard the word leverage, few know its definition, how leverage works, and how it can directly impact their bottom line. Let me see one of the not I educated, how can I say this? 7 Nations, not you. I want to see those that are more than 6 months, less than 6 months on here. Tell me exactly what leverage means to you. Put it in the chat. What does leverage mean to you? Come on, 6 months and under. Are we writing in the chat? Oliver, I can't see the chat because I got my screen open.
Nobody put nothing yet.
Okay, so no one's going to give me what they think leverage means to them? You know what? Okay, well, you know what? We're gonna get to the definition of that. Okay, somebody put something in.
He said he doesn't really understand it. That's Bashan.
Okay, right. Great. You know what? And again, as we say, it's good to say that you don't understand, because believe me, we are here teaching you, but believe me, we don't have the answers to it all. We are still getting information. Yes.
We have Reverend Clark said exponential growth. What's that, Clark?
Well, didn't I say 6 months and under? Reverend Clark, what you doing answering that question? But it's okay. It's all right.
And then Tiffany got an advantage.
Okay, it's okay, Dr. Clark. I'm gonna let you slide this one.
No, that was Reverend Clark.
The concept of using other people's money to enter a transaction can also be applied to the Forex market. Throughout our training, we'll explain the benefits of using borrowed capital for trading and examine why employing leverage in your Forex trading strategy can be a double-edged sword. Okay. Now I asked everybody the question of leverage, defining leverage. Leverage involves borrowing a certain amount of money needed to invest in something. In the case of Forex, money is usually borrowed from a broker. Forex trading does offer higher leverage in the sense that for an initial margin requirement, a trader can build up and capital a huge amount of money. To calculate margin-based leverage, divide the total transaction value by the amount of the margin you are required to put in. Now, these numbers you're seeing, for example, if you are required to deposit 1% of the total transaction value as a margin, you are intended to trade one standard lot. We're going to use this pair, USD CAD, which is equivalent to 100 USA, $100,000. The margin requires you to at least have US $1,000. Thus, your margin base level will be 100.1. Again, these numbers are very important, especially when you're setting up your demo, as Coach Williams told you before. When you set up your leverage, it's going to be able to be based on what you can trade and what you can't. Okay, right now we have this. However, margin-based leverage does not necessarily affect risk, and whatever a trader is required to put up 1% or 2% of the transaction value, as margin does not influence their profit or losses. This is because the investor can always attribute more than the required margin for any position. This indicates that the real leverage, not margin-based leverage, is the stronger indicator of a profit loss. Over here on this side, Coach Koss or Coach Oliver, if you can look at this chart over here, can you just explain to them what's the difference between the margin base level and the margin required level?
All right. The margin base level is as far as 400-to-1 ratio, which is equivalent to 25%. Which I gotta understand, and I was gonna bring up, what when you're trading and your leverages, the higher your leverage is, the more money that you're putting out. So that's more money that you're spending. That's why when we talk about as far as the GPY trading, JPY currency in your lot size, if you put a large lot size in, you're spending more money. That's why it's best to, when you first start off, you start off with a 0.001 lot size, a penny, to get to get yourself to the right thing before you can start going to like 5 cents and 10 cents. You know what I mean? Because the more that you put out, the more that it's going to be. So give me 1 second. Give me 1 second for my mother calling me.
Okay. All right. And to continue, as he's saying, remember, the more money you have to put out. That's why sometimes when you're putting when we tell you to go in there and put the 1.6, all of y'all should at least got a copy of the chart with the breakdown of what the leverage is, as opposed to trading and as opposed to how many pips you can get. Everyone should have a copy of that, or at least if you were in Epic's back office, you should have seen the presentation they did on that. Now, what we're going to do right now is I'm going to have Coach Koss is going to pull up the chart, and he's going to show you how to put your leverages in and how to count the pips as we spoke. We have so much more that we have to bring to you, but right now, due to time and it being Thursday night, and I know most of you are probably winding down, we wanted to bring you something letting you know what is very important for you to continue to do as far as with your trading. Get into your risk management and learn your leverage. And believe me, some of your bad dreams will turn into good dreams. I now turn it over to Coach Koss to continue.
Good evening, everybody.
Can't hear you guys. You low.
Can you hear me now? I got my mic
Just a
on.
little bit.
Check one, check two.
Yeah, we good. We good. We good.
Okay, everybody. Great job, Coach Martin. I love those slides. You really broke it down. And I think what we try to do here is show you on the charts, explain it to you in chart format. So okay. I'm pretty sure everybody's familiar now with how to use the long and short position. But if you're not, these are the tools that I use before going into a trade. So if you're looking to trade this particular pair, let's say I'm looking to buy this pair from this level, from this support level, I want to take a buy. The buy is the long position tool. So what you do is you come over here on the left, pick the long position tool. And what this will allow you to do is, if you wanted to, let's say, get in on this second candle, with the long position tool, you're able to set the stop loss and to take profits. And let's just say that was your first take profit right here. Let's just say that was your first take profit right here. All right, so you saw this trade set up. You saw price come down, hit this particular level and settle. Price turned around and started buying from this level. So you were smart enough to get in on the second candle. You saw that in it, based on where price came from. You said that was your target. So that's what I did. I set my target to trap price right back where it came from. So and using where the price landed, let's say where it took off, we're at the support level, you could see that price wicked out right here. So the smart thing would be to get below this level, with your stop loss. So maybe I can even get a little bit lower, like right here, to be safe. So this tells you right here that you're risking 41 pips in order to make 133 and a half pips. So that's a risk to reward ratio of a 3.25 to 1. Okay, that's an excellent trade. So if you're willing to risk 41 pips to gain 135, would you take that trade? Anybody? Would anybody take that trade besides me?
Yes, guys.
All right, thank you, Coach. Yeah, terrific. Yeah, that's a great trade. So now the question is, what is that going to cost you when you put that order in? Okay, what's the right lot size that you should go in based on the amount you have in your account? These are the questions you should be asking yourself. Okay, so you got $1,000 account, and I think we've been hearing somewhere between 1% to 3% you should be risking on each trade. So 1% of 1,000, $10. I got that right. Okay. And if you're willing to risk 3%, that means you should be willing to risk $30. Okay. So now this particular stop loss is 41 pips. How much is that? How much is that? How much of how quick? How many? How big of a lot size do you need in order to get that? In order to hit those 41 pips, right? Somebody gave me an answer. Oh, so there's a there's a couple ways you can figure it out. Okay, like I know, like when the top of my head, I'm pretty quick with numbers. I'm like, okay, I got $1,000 account. I'm willing to risk, let's say $30. So that means that I need a small lot size. I need a lot size that maybe if I can handle 30 to 40 pips, somewhere in that area, to absorb this particular loss. So 30 pips, put a .01. There you go. That's how one way to figure it out. So depending on your lot size, I mean, depending on your account size, will determine how much you can risk on this trade. But that's the range that's the range that you would like to set up. A nice 3-to-1 ratio. If your first TP was here, somewhere over here, as long as you're like at least a 1-to-1 ratio or higher, that would probably be a safe trade. What's the sense of risking 40 pips if you're not going to make the 40 pips? So at least make it a 1-to-1 ratio. All right, so that would be like my first stop loss, my first take profit. Maybe over here would be like my second take profit. And then when I'm when I'm shooting for the target up here somewhere, that'll be my third take profit. Any questions with that?
Yeah, I got one.
Sure.
That's a nice turnaround. Where price dropped at and then
Yeah.
it shot off. How, looking at that chart, how do you determine that it's going to turn around and shoot up like that, or if it backs up on you?
What you have to do, Brother Ali, is
Back tree.
well, no, I was going to tell you is um, where's the recorder? Where's the recorder? Why it's not working? But anyway, what I wanted to get at is, as you see price start to work its way down over here, it's going to work its way down. So you should have already established this level at this
Yeah.
point. From here, when price was here back in December, end of December, you would have noticed this level, this key level. When price came back to this key level, you would have been somewhat prepared. So what you would have been doing, you would have been looking at this on its lower time frame. So the date is the 11th. So you would have been looking at this on a lower time frame. So like even on the 1 hour, you could see here how price start to slow down, and you had this first candle and then it took off. So even you would have saw this first candle form when it hit this key level, and you should have been you should have been looking out for more buys. Okay. When you go to when you go to a 30-minute or 15-minute, you'll see the turnaround even more so. So here we are at the same turnaround, looking at it on a 15-minute window.
Mhm.
All right. So you would have saw price come down and get to this area and start to show a little, bull run, little bull momentum, and then it went back and did a retest, and then it took off. You see that?
Yeah.
It was up for you a little bit. So what I'm saying is, right in this particular area here, you saw price come down. Oh, cheapers. Get to this point, go up a little bit, come back down, test it, and then take off. So you would have been looking, for buys down in this area. Um, you would have been looking for you would have started seeing the turnaround in this area right here on a smaller time frame.
Hmm.
If I went down to a 5-minute, you'll see it turn around even better for you. You'll see more candles lagging on the at the support level. Okay, so you couldn't see it on 4 hour because it was one candle down and one next candle up. But as price was working its way down back to the support level, because this level was already there for you, you should have been looking for a turnaround. Okay, you see a lot of lot of see a lot of dojis, and so price was eventually looking to turn around in this area. You probably would have picked it up with the smaller time frame.
All right.
Yeah. All right.
Yeah.
All right. Because you could have got in on the trade, really. You could have got in on the trade, let's say over here, right? You would have saw this. It's right in this area here, right? As price was working its way down, you would have saw that it hit hit resistance, and it pushed itself closer to the floor. And you, like I said, you would have saw these little candles, and you would have been ready for the turnaround. But we know we're at a key level right here.
Hmm.
All right. So now, once you saw price, let's say, break out of this level, you could have got in. You could have got in once it got above this box. You could have got in once it got above this box, and you would have been good to catch that ride all the way up.
Yeah. Ooh.
Right? You could have got in like right here, like right over here, and you would have rolled it all the way up. I'm sure that's the end of it. 210 pips looks like.
Jesus.
Okay, so that's visible, more visible on a lower time frame, brother. Okay, but that's how you would have been able to get in on that trade.
All right.
But that was a great question. Now, if you let's go back to where we were.
I have a question.
Yes.
When you were saying take profit 1, 2, and 3, can you do that all in one order, or you gotta put in 3 separate orders? That's one question.
Yes.
I have
You
two.
can. You can't have. You can only have one profit. On the order.
So you're saying when you hit one take profit, then you'll put in another trade?
No, what you would do, brother, Ridout, is
Move your
you would
slot.
stack trades. You would go in and let's just say you want to risk 5%, or you want to risk 3%. Okay, as long as you have more than 1%, um, as your risk, the money that you want to play with, then you can split that. So if you have, let's say, 2% that you want to risk, you can put 2 trades in at 1% each. If you have 3% you want to risk, you can put 3 trades in at 1% each. If you have 5% that you want to risk, you can mix it up. You could
Then
have, yes,
you
sir.
would just you would just put them in at different stop and take profits.
That's correct. You would have the same stop loss. Okay, because basically, let's say under this scenario, you waited, you on the lower time frame, and you got in above this box, which we saw in the 15-minute. You got in above that box, and you saw that you saw that you had a key level. You saw that you had a key level here. So you had a key level there, one here, another one there. And it looks like there's a fourth one. I don't know where it went, but you could say there's a fourth one right here. Right, so you got in above the box. Okay, you projected price to get back up to this level, right? Because that's where it was over here. But in order to get there, you know it's got to stop on the first floor, second floor, the third floor, before it gets to the fourth floor. So you can set your first TP could be here or there. Second one could be there, and the third one could be there. Okay, or you could have 4, 1, 2, 3, 4 TPs. Okay. Um, if you thought price was going to get up to this level, that could be your fifth TP. So what you would do is, okay, you want to risk 5%, 1% on every trade. So 1% for this level is TP1. Same entry point, same stop loss. Let's just say for the sake of simplicity, your stop loss was below this box. Okay, you set the second trade, same entry, same stop loss, different take profit. Third trade, a different take profit. Fourth trade, a different take profit. Fifth trade, a different take profit. So now, even on the fifth trade, well, let's just say this. On the first run, you hit TP 1, 2, 3, 4, no problem. And then price sold off. Okay, you have your fifth trade still running because TP didn't hit yet, right? Price came down, it never touched your stop loss. So eventually price will get to TP5 and you'll close that trade out with at TP5. Okay. Well, okay, so you got TP5 still running. You grab all this profit. You saw price sell off. You saw price come back down to TP1. At that point, you could stack more trades. Okay. Bam, TP2 again. Came right back to it. Go back in again, set another level right here. Since it's still going up, you know, it gets that same level again. Some same key levels came right back into play all over again. So you could have took this TP, all this profit. You could have watched it sell back off, get back down to your TP1 and got back in again and got more profit from here to there. As another trade, TP1, another trade, TP2, TP3, and TP4. So in this one particular trade, or this one particular setup, or this one particular analysis that you did, and you came up with this initial trade here, that analysis was so great that you were able to get 2 trades off of that. The same levels. Okay. You guys see that?
Yeah, I see it.
So to answer your question right out, yeah.
Yes, it does.
You would have to just put in multiple trades to do that. And this was a great example. You had 5 TPs on one trade. And then that pair was so good to you, you got back in again when it came back down to one of your key levels. And you got back in and you took the trade all over again for more profit. So. But yeah, that was a great question, Doc. Great question. Now, the other thing to do is, let's say you mapped it out and you saw TP5. You were confident that this pair is going to hit TP5. All right, but you only go in for one trade. Now, what you have to do is you have to use the sliding stop loss. You got to use a sliding stop loss. All right, so I get in right above the box, and I set it for TP5. It's a 4.3 to 1 ratio. It says here I'm risking 59 pips to make 255 pips. So as price works his way up, and I hit this first level, okay, that's great. What you could do at that point, you can slide your stop loss to break even. So you slide your stop loss to break even, and now you're in a risk-free trade. All right, so now you're in a trade, you're not going to lose, and you're just going to let it play out so you can get your profit. So now
Hey, Coach Cos.
Yes, sir.
So when it retraced, was they going back to clean up orders that was there?
Yeah, that's usually what happens. Um, you guys have been following me. I've been pointing out what I call imbalance in the market. You can kind of see one right here, right in this area here, where basically when price was working its way up, you can see that impulsive move where it basically spiked through that box. And then what price did was it came back down and just got to the top of the box before it took off again. So there was no opportunity to get the sellers in there. So what Coach Ali is saying is that the market makers, they come back into these areas and they put orders where there weren't none. Well, basically what he said is they clean up in this area. So that's what happened. They came back, they cleaned up, and then they decided to take off again. Okay. So we know that. So what we do is we'll ride it up. Okay. When price got to TP, this first key level, I moved the stop loss to break even. So now I'm in the trade risk free. Regardless of what it does, even if it kicks back, I won't lose any money. Okay. So as price works its way up to TP2 or the second key level, I can do the same. I can secure more profit. So now price is going to make its way up to the third level and to the fourth level before it turns around on me. All right. So right now I secured profit to this for the first key level, and I secured profit to the second key level. Since price is at the third key level, I move my stop loss up, a trailing stop. When price gets to the fourth key level, I will do the same thing. I'll move my stop loss up, and I've secured profit at 1, 2, 3 key levels. So I'm great. Now when price comes back, it hit the fourth key level, and then it turned around. But remember, I got TP up here. That was my final. I got one trade, and the TP is up here to close the order. What will happen, because I move my stop loss up here, when price comes down, it'll kick me out the trade. It'll kick me out the trade. But that's all right. So like I could see price because price got up to this point, and I can see price stuttering at this point. I can get out when prices right here. I see it kicking and coughing and hacking right here. So I would have cleared some pretty significant profit just on that one trade. When price came back and kicked me out, I would have still been happy. Because in theory, I won 1, 2, 3 key levels, 3.5 key levels on this trade. All right, so that's how you do it with one trade. I mean, with one trade, you have a TP that's 5 levels up. You just slide your stop loss and secure the TP as price moves along. Okay. So again, it would have kicked me out when it came back down, but I could have recognized that it settled at this key level again, and I could have got back in. There's two ways to approach it, brother.
Right. I have another question.
Yes.
Okay, when you originally used was that that was the buy tool, and you had
It's
your
called
parameter,
long and short.
right? The long, you used the long tool when you
Yes.
okay, and it was risking 41 pips originally when you had it. My question is, okay, how did you transform these numbers over to the trade when you make the trade?
Okay. Yeah, again, that's a great question. So you set it up again. I say get in over here. Set a stop loss below the pink box. And let's just say we're shooting for TP4. This
Right.
target right here. All right. So what you would do is look to the right. What I mean by that is the parameters are here. The tool tells you that you're entering at 134,911. And it's telling you your stop loss should be 134,321. Then it tells you up here the profit number should be 137,031.
Okay.
Can you see that? Can you see those numbers?
I see them. I see them. That's what I use. That's what I don't.
Those
Yeah.
those are be the numbers that you're gonna be your guide. And I say it that way because when you go to the broker, the entry may not be the same. The entry could be 134,900 by the time you get there.
Okay.
Or it could be 1434919 by the time you get there. You understand what I'm saying?
I understand exactly.
All right. So, but basically, that's what you want to. That's your target. That's your parameters there. Okay. Whether you use a long tool or a short tool, it tells you right to the far right. Did that answer your question, brother?
Yes, it did. That's what. Yeah, that's what I had used those. I had used. That's what I had. But then I had to put them over to MetaTrader.
Yeah.
But I had copied those numbers down. I wanted to make sure because I had a trade. I thought I had, like I was talking to you earlier, but I thought I was only risking a certain amount of money, so to speak, and but I was risking more. I didn't understand why did I do it? How did it come up wrong? It came up wrong in my favor, but it still came. But it wasn't what I was expecting. So that's
Well,
why.
this is giving you a pip count. This is not giving you a dollar count. This is giving you a pip count. Stop loss of 59 pips. You see, this is showing you that you have a target profit of 212 pips.
Right.
I have no idea what this calculation number is over here. You know, I don't know. I guess that's based on the broker at this particular broker that we're viewing in TraderView. I don't know what lot size that they're using to calculate this. Okay, but the pip count is what's important to you.
Can I ask you a question on that note? If I had a lot size of just say 0.01 and the pip count is 212, how much I would like to know, like, how much am I risking? Well, that's only a penny, so that's just $212.
Well, it's not a penny because you said 0.01.
Right. Zero. I'm in point 0.001. Then I think.
There's a 0.01. Yeah, that's a penny lot size, 0.01. I'm sorry.
Okay. So that means it'd be $212.
What was you trading?
I'm talking about right here where it say 212
Yes.
pips. If I had a 0.01, that'd be $2.12.
Yes.
Okay.
It depend on the currency that you're trading.
Okay,
too.
I was doing like if I was doing,
But
if I was
but
doing
that
this,
would that would equivalent to $2.12, depending
if I
on the
was
trade.
doing, if I was doing this pair here, Great British USD. If anything but the Japanese yen, if I was doing, all of these besides the Japanese yen, would it be $2.12? That's what
Correct.
okay.
Do you have the price chart?
The price chart. I don't think so.
You should.
What's the price chart?
You should have the chart where you have the currency. I mean, where if you put in a penny lot size, 2-cent lot size, 3-cent lot size, 4-cent lot size, you should have that. That's in your Bible. That's in your Candlestick Bible.
Well, I have the Candlestick Bible, so I have it there.
Have you read the Candlestick Bible?
I really have listen. I have the Candlestick Bible at arm's reach. So I said I read it religiously, so to speak.
So you should see the chart for the lot sizes in there.
Okay, I didn't see that in this Candlestick Bible.
There's only one.
What about the 2-week syllabus on your 2-week syllabus when you did your 2-week syllabus?
Maybe it's in a 2-week syllabus because I didn't never see it in the Candlestick Bible. I might have overlooked it.
It should be under day 4 leverages, I believe.
In the Candlestick Bible?
On the syllabus it is. On the Candlestick Bible, I don't know what page it is on the Candlestick
Oh,
Bible.
okay.
It should be,
Yeah, I didn't see it in the Candlestick Bible anywhere. I might have overlooked it. Or I might not have got that far yet.
What day are you on in the syllabus?
Oh, I done did both the weeks. I'm talking about in the Candlestick Bible. I might have overlooked it there or haven't got that far yet because I haven't read the whole Candlestick Bible yet.
Okay.
This was awesome. Great job, coaches. I think we did a good job tonight, bringing back some information to the team that they really needed. Brother Riddick, I do know, if I'm not mistaken, Brother Oliver, we do have a copy of one of those that we did in one of our presentations with the leverage and everything, right? That we probably can send out to the group. That way
Yeah.
they can have it firsthand. We do have something, we'll try to get that package together to y'all. But like I said, we're here as your team to help you, because Epic has a lot. When I'm saying a lot, you have a lot. We're here to directly grab y'all by the hand and take y'all and walk y'all through this step by step where you're not having, like some of you said, you didn't know what leverage meant. This is why we, the coaches on the New Nations, are here to help you, to assist you on this one. So again, reach out to any of us at any point in time if you need questions, if you have questions as far as like, I'm just gonna be honest, don't call us 11, 12 o'clock at night, but normal hours. Reach out to us personally and we'll be able to help y'all step by step if it's something that you're not understanding. Everyone understand that?
Yeah.
And I apologize about the noise, but I'm at my daughter's house and my grandkids in the background. But again, is there any questions we have besides that anyone needs to be answered? Okay. With that being said, Coach Oliver, is there anything you have to present? Would you like to talk to the group about?
How is everybody doing with their demo accounts?
I'm
Much
doing
better than the first time.
Okay, that's good. What did you change up that made it different for you this time around?
Support resistance. Started using my trim lines more, lowered my leverage, and back traced a little more.
Okay. Miss Young?
I've decided to make changes in concentrating more on when to possibly trade or when to chart everything so I'll know what to prepare and do when that next time comes.
Okay. Brother Red
Yeah, I've been putting in 3 trades. I won 3 trades.
Okay.
Uh, I was slow
Congratulations.
start. Thank you. I was slow starting, and but I put in. I'm feeling more confident putting in trades. It was small. And the last trade, like I said, I for some reason I calculated some things wrong, but it turned out into my favor. But I was still trying to figure out, how did I calculate it wrong? So that's why I was,
Okay.
even though it turned out, in my favor, it was a benefit. My account is up $400. So
Good for you.
Okay.
yeah, thank you. So I'm feeling pretty confident,
All right. All right.
You said
Congratulations again.
your calculation, but how about your analysis? You have
I'm doing.
analysis.
I think, from last time when I was asked what was the top down analysis, and y'all explained that to me, and I think my analysis is coming along a lot better now. I'm getting more comfortable with identifying different patterns, and the different candlesticks that indicate verses, and things of that nature. And when things are just consolidating, I'm getting a little more confident in identifying those things.
Beautiful.
All right. Des, how are you with your trading?
I'm good.
Any wins, any losses?
Yeah. I got a few wins and a few losses.
Okay. Richard Clark III. Richard Clark Jr. Must be busy. Waiting, not so many trades at once. Sister Harris.
I'm good.
Are you winning, losing?
A combination of both, and I'm winning right now.
Okay, that's great. That's great. Juan, I know we just set yours up.
Yeah, we just started.
So we just started with yours. So we are going to work on that. I'm gonna
Yeah.
Zoom with you for that.
All right.
Who else? That's it, right? That's who else we got on. Okay, everybody that's on your demo, make sure that y'all submit your demo account information, your trades, the log to the corresponding email that we gave y'all, and so we can look over y'all trades, y'all wins, y'all losses, and so forth, and put your account balance and so forth there too, so we can see your account balance. All right.
Okay.
Coach
I
Kai.
do have a question.
Great.
Yes.
So in talking about the watcher that we use as a reference to then go to that particular symbol and chart it and whatnot before we execute it, I had I'm gonna look it up real quick because I think I took a picture of it. I had tickets that were even, and I remember one of the classes that we had when we were talking about if there's 2 tickets that that were the same, to not use them. So I was trying to, in viewing it myself, trying to figure out which one would be best to pick in that situation, because they were almost the same, if not maybe one level of a difference, but it was multiple of them.
What
So
day
I
was
didn't
that?
know.
Was that the day of the inauguration? Yeah, was it yesterday?
No, I think it was earlier today.
Earlier today?
Okay. I'm trying to find it because I messaged it, and now I'm having a brain fart here.
When you with that currency strength meter,
Yes.
That's why we tell y'all that you have to make sure that you're your own signal. You have to, when you look at the news and then you go to the charts and you start charting, you got to refresh, like Costello says, you got to refresh that strength meter. That strength meter needs to be.
Well, once I go
refreshed.
to once I open a new page, I automatically go to it, so it does refresh. Now, I guess you're saying after I look at it and pick it, I should refresh again after I chart it, maybe?
Yeah, refresh. You always got to make sure that you refresh it. Yeah, the strength meter should be your last thing that you're kind of actually looking at. Because if you got two pairs, say you got USD and you got CAD, and they both the same, you wouldn't trade those because all you're going to be doing is
Exactly.
you're going to be in consolidation. Now, say you got USD and you got CAD, and you got one bar that's a little bit higher, like the USD got one bar stronger than the CAD, then you would trade the USD against the CAD. But you would you really want to try to stay away from stuff that's like almost dead even.
So that was what the situation was. It was Euro, GBP, CHF, and NOK. They were all on like the 4th level, so it was like green. And then USD and NZD were more yellow, and then the other ones were real low. So I was like, I know from what I'm learning to look at the higher ones, but as far as pairing it with someone else, I guess there would have been multiple combinations of options of like Euro with USD or Euro with NZD. Is that what I would have more or less looked at, or just kept refreshing a little bit more before I made it, before I finalized with everything else I had?
Yeah, like I think you have to refresh it every 15 seconds or something like that. What is it, Costello?
It's you have to refresh at least every 60 seconds. Minutes.
Every 60 seconds.
So
Yeah.
if I'm understanding correctly, I wouldn't more or less look at this as a need to know what to go chart. Pick something, chart it, and then use this as a last result before I hit the button, more or less.
You can go to the strength meter to look and see what's in balance, and then go to the charts and look at it, and then before you execute that order and all that stuff go back to the strength meter and check, but make sure that your charts and stuff is messing up, because like you said, the market can switch and reverse quickly. So if you're charting right, and you got your key levels, you got your resistance, you got all that stuff there, and everything is the way it's supposed to be, it should automatically match up with your system.
Okay.
Like right here, you see Kyle put up the
Can somebody mute their mic, please?
I think that's Willette.
Hold on a second. Let me
Yes.
Give me 1 second. Let me just okay, I think she did it already. Like NZD and CAD, you wouldn't chart those two. I mean, you wouldn't mess with those because both of them are the same.
Yes.
Now, if you did Euro and CAD, that would be a good combination, or JPY and CAD, JPY and New Zealand, the Swiss. I mean, JPY with the NZD, or JPY with the Swiss, the CHF. You would chart those, because you already see that the JPY is strong right now. The euro is strong right now. The US is strong, so you can go US CAD, US NZD, US CHF. You could do the USD with the odd, the euro with the odd.
So with that question that you're saying, because you said Euro, USD, and JPY are the 3 strongest, it wouldn't be beneficial for us to combine the 2 strongest one. It has to be more of a weaker one, like a 1 or 2 level one.
You have to. Yeah, you have to. Yeah, you should. That's the object of it. You don't want to put something in the market that's the same, because what it's going to be doing? It's
I assume that one level of a difference made a difference. So that, I guess that's my question. Does it? But apparently it doesn't.
yeah. You kind of want to stay, anything that's too close to each other, you kind of want to stay away from.
Okay,
Take the imbalance, the strong imbalance.
got it.
So right
Hey,
now,
coach, that DKK, the Danish Chrome,
you stay
that's
away
not
from
one
it.
of our pairs, is it?
Nah, actually, that wasn't even, I don't even think that was on the strength meter. I think that they might have just put that up there recently. But I know the NOK was there. I don't remember seeing the DKK, but I don't use the strength meter.
Show off.
I do, yeah. You know, if I go to the strength meter, it's very seldom, and that's probably if me and Kaz is charting something, and we looking to go into the market to get some money. Then but yeah, we very seldom use certain certain things, because you got to, like you said, you got to be your own signal. Well, like so right now, I would probably see now to see how their screen refreshed and see everything changed.
Oh wow.
That
Hey,
quick.
JBP,
Yeah, I've seen that happen that quick.
So now you couldn't even go in and mess
Execute
with
anything, yeah.
NZD or what? No, I would go in the market, because you see that the JPY is weak right now, and
I mean, essentially you would change it up from what you first looked at, depending on what it was.
And a switch. So if you're refreshing the screen, and I was to go into the market right now, I would be charting the euro against the Swiss, or the euro against the JPY, or euro against NZD or something. You could do the euro against the odd, because you still got 2 extra bars on it. So if you were to trade euro against JPY, what would you be doing?
buying.
You'd be buying?
Yeah.
And then if it why would you buy?
That was the question I was going to ask you. I always thought that the stronger one would always buy against the weaker one.
And then you would be selling JPY because it's not doing nothing.
Oh, right. Yeah. You flip it around. You're selling all your JPYs. Yeah.
Okay.
Can you flip these pairs?
Can you flip them?
Sometimes.
Yeah, JPY euro instead of euro JPY.
Yeah, you can.
All right, I've never done it. I was just curious.
Yeah, you can. If it was JPY and CHF, what would you do with that?
Nothing.
Nothing.
I'd move on.
Okay. And then if you did CHF against CAD,
you will buy.
No, I'd be selling.
Be selling, yeah.
Mm-hmm.
right?
That's a good pair.
Otto, you will buy, right? You wouldn't buy? CHF Swiss?
The Swiss is weak. You would sell it off.
Oh,
You're saying, Coach Oliver, you're saying if the CHF was the base pair, and you were saying CAD was the quote, you'd be selling, huh?
You sell off because
Sell off. Right?
Yeah, the CHF is weak. You sell that.
So, but if the CAD was the base pair, and the CH, the Swiss Canadian franc was the quote pair, you'd be buying.
Correct.
Yeah.
It sounds like Brother Red Out's on to another $200, $400 in his next trade.
No, I just got it down in theory right now. I'm getting it, bro. I'm getting
But
it. You see,
I
I don't be
believe-
missing none of these. I don't be missing none of these classes because this is where I be learning from.
I believe a while back, Coach Clark had actually put the percentage chart down as far as your lot sizes. He had shared it in the New Nations thing. We will repost it tonight. Anything else?
No, I said I really don't understand leverage. I mean, how do you can determine your leverage? See, I don't understand. I really have I really still kind of, I'm baffled with leverage, so to speak.
What you mean? What you mean?
I mean, like,
what you mean? Can you determine your leverage?
I know they said, try not to leverage too much. So that's why I figured you determine your own leverage, how much you leverage.
Let me ask you a question. When you opened up your demo account, wasn't you allowed to pick your own leverage?
If I remember correctly, we picked yes, yeah, I did. I did pick my own leverage.
So part of your question is answered because if you actually could pick your own leverage. So when you pick your own leverage, that depends on how much you willing to trade and lose. If you want to put a penny lot size in, if you want to put a 2 cent lot size in, 3 cent lot size in, 4, 5, 50 cents, $1 lot size. It's up to you on what you're willing to lose as far as your money. So if you got an account that's $500, you know how you got to calculate and make sure that you know what you're willing to lose or what your account could withstand on certain trades that you trade. Like, say if you was trading like an indice, that's that rich stuff. If you decided to put $1 lot size in, but you got to have a lot of money in your account for that. So say you tried to do that. What happens is if you put it in and you're going to have some drawback and resistance at times, you might already be in a hole $500-$600 before it actually even goes to wherever it needs to go. That's like when you execute a trade. When you execute a trade and you go into the trade, right? When you put in, say you put in the penny lot size, right? And your trade already start going in the negative before it gains to where it's supposed to go. Okay, that's why when he said earlier, as far as your lot size, okay, your first take profit, you want to make sure you're only willing to lose 3 cents on this trade. 3 cents. So you got a penny on one, penny on the other, take profit. Right?
All right.
So you got those trades in. The trade. All right. So for instance, right now, Costello went in on this trade. He did CHF, right? He went in on a 5 cents lot size. Right now, he's losing $1.67. Right?
Right. Right.
So it's in fact a 25 cent difference on the trade. When he went in, his commission was at his commission was negative 25. So right now, he's at $1.83 at a 5 cent lot size. Should be more than that. 5. Give me 1 second. 5. Let me take my pip calculator up. I mean my 25.
Hmm.
0.05.
Okay.
Okay. Don't worry about it. Go ahead, eat.
Hey, Kaz,
Yes,
$2.01.
what are you putting in right now?
I was putting a stop loss.
Of what, 200 pips?
Oh, no, what I did was I just used the crosshairs. I used the crosshairs and made a trader so I could figure out where I want to put my stop loss.
Got you.
So I can visually see. I can visually see that I want to be probably underneath this here low point. So with the crosshairs, I want to get below these wicks. So that number is 68,237.
So how many pips is that?
68 what? 237.
What you said?
250 pips.
50 pips.
Something like that.
0.
One day right here. 68237. 68237.
So
Yeah.
So in fact, with his if he's doing 50 pips.
With a 5 cent, how much is that? How much is that?
At 5 cents, that's 20 that's 250. That's 5 cents. You said 50 pips.
It should be
Every 10 is 50 cent.
250.
Yeah, 250. Every 10 is 50 cent, 250. So that's $2.50.
Correct.
So that's how I did that. Now, right there was like sometimes I'll say get in the trade, market execution, get in the trade now.
What's up, honey?
So I'll get in the trade.
Why do you want to do this at the oddest times?
And then figure
Oh,
out
you're
what
going to
the
bed.
stop
Sorry.
loss is.
You don't need any melatonin?
While the trade is running,
Good.
while this trade is going, I figure out, okay, my stop loss is over here. I can just modify as the trade is on its way. And from what I'm looking at, I don't know where the profit is, but I'll just go ahead and say, give me a 200 pip account profit, something like that. That was 20 pips, sorry. 200 pips. 200 pips.
And you're looking to gain what?
I'm looking to gain 200 pips, I think it was.
Okay.
That was the number I put in. There it is. Yeah.
So for his $2.50 that he might lose, he's looking to gain $10.
Okay, going for 50, he going for 200 pips.
For 200 pips. So would y'all take that?
Yeah, yes, I would.
Holly, Tiffany, would y'all take that? Des?
Yes.
I would.
So what you gotta look at what you're willing to lose to gain. So that's why we always say about giving yourself some cushion. You gotta give yourself some cushion so that whatever you think, if you know it's gonna be on a strong buy, you got to give yourself cushion for it to buy. I believe I see a photo just hit the New Nations thing on Telegram. I'm gathering Reverend Clark just resent he just sent the chart out on the standard, the minute, the micro, and for the currency, and we'll get the other one to y'all too, with the 1 cent, 2 cents, 3 cents, 4 cents, 5 cents, 6 cents, and all that, and so forth and so on. All right.
Very good.
All right, everybody, make sure that y'all submit y'all demo stuff to the email so we can review it. If we have any questions, we'll email you back or get in contact with you. We will have a market forecast on Sunday. Who wants to volunteer for Sunday to actually, in fact, teach the class? Why are you shaking your head, Tiffany? Huh?
I took a picture.
Why you shaking your head? This is how we know that you're charting good.
Don't forget Saturday.
So you gonna volunteer, Tiff? I can't hear you. You on mute? Yes, you can. Okay, Tiffany volunteered to chart on Sunday. We'll help you out. We got you. And I'll give y'all the pairs of the week on what's gonna be good in the market. So if y'all paid attention to those pairs the last time that was put out, the last time we had market, which they actually did good in the market. So this week, the market should pick up a lot, being that Biden's signing a lot of executive orders and a lot of stuff right now. So I will be charting and looking at some stuff if y'all want. Oh no, don't forget we got Fun Day Saturday. So everybody had their cigars and their whatever you want, your coffee, your Coronas, or your holy water. I had to get that for you, Clark. And we sit back. We definitely got a little game to play that we trying to put together by Coach Willette. And we'll see y'all then. So everybody have a good night. If you're coming on the prayer line, I'm about to get on the prayer line. We have prayer line every Thursday night. If y'all want, you all are welcome if you want to. And everybody stay healthy. Anything else from you, Coach Kaz? Coach Willette? Clark is gone already.
We did good tonight, guys. Hopefully we explained and answered some of the questions. If not, we'll just pick it up next time.
Bola, you have anything?
Are we submitting, I have a question. Are we submitting our stuff tonight or Sunday?
You can submit it by Sunday. Submit it by Saturday so we can look at it Sunday. So this way, when we have market forecast, if I have any questions or Kaz or Willette or Clark we could be able to address some of this stuff.
Good participation, class. Good participation.
It was a good class, Oliver.
Thank you. Tiffany.
Yes, sir.
So pretty much just your support, your resistance, your key levels, your trends, stuff like that.
Okay.
If you want to brush up practice on that, where would you if you want to team up with somebody, you could team up with somebody, and then what we'll do is Brother Holly and Brother Rideout, you'll do the charting. If you want to team up with Des or Sister Harris, team up with one of them, Tiffany. Brother Rideout, Brother Holly, y'all work together. What we want to see is how you would execute and go into the market on MetaTrader 4, as far as where would you get in the trade. So you're going to show us actually you can use one of your account that dummy account, the other account that you almost blew. Use those accounts and execute. We want to see you execute a trade. Put your take profits in, at least 3 take profits, and your stop loss for the trade. So y'all work on that.
Okay.
All right.
Who was looking for the lot size? I sent the lot size to New Nations.
Okay. Thank you, Brother Bowler.
Coach Ollie, what did you say? You say something about teaming up. I'm sorry, I missed some stuff.
Yeah, I said if team up with Tiffany, y'all can work on charting. Everybody got Telegram and stuff. Yeah, try to figure out something. With key levels, support resistance, your trend lines.
Who is that?
Killing me.
That's I don't know. So you'll have your TPs, you'll have your trends, your uptrend, downtrend, key level, support, resistance, and where would you execute for the market? So y'all work on that, and then they'll work on, but Rideout and Holly will work on the MetaTrader. Rideout, my bad, Rideout. On the MetaTrader 4, as far as getting in with they take profit 1, 2, and 3. They'll work on that. So this way they can show the class and show the coaches. All right.
Yes, sir.
All right.
I usually do most of my charting in Trading View, and then I just plug the numbers over into MetaTrader 4, because Trading View is I feel more comfortable with Trading View. Then I just put the numbers over into.
Right. You and Holly get together. Y'all figure it out, because Holly will show you how you could trade on MetaTrader 4. We told you you could actually chart on MetaTrader 4 too.
Yeah, I've been just doing it on Trading View so much. It seemed like it's easier for me.
It's
Okay.
better. It is.
It's the same
Yeah,
thing. Just all
yeah.
you're doing is just switching your information from one thing to the next.
Yeah, I just plugged the numbers in to make the trade because that's where the demo account is at. But all my chart and all that, I do that on Trading View. And then when I'm ready to execute the trade, I just put the numbers over into MetaTrader 4.
Okay.
Well, we can do it both ways since we both got to work on it.
Okay.
I can show you how. I can show the class how to actually chart out on MetaTrader 4, and you can do your chart out on Training View and do the same thing.
Okay.
All right. Sounds
All
like a
right,
plan.
all right, all right, y'all. It's 7:46, and
I was getting over like I
Reverend
gotta
Clark
get
is
the
getting
prayer
ready to do his church, so I gotta get on the road. But I appreciate all of y'all being on here tonight, but I just wanted to put this plug in. Let's not forget about Saturday Fun Day. If you haven't seen the information, I'm asking everybody to get on it. This is a day just for us to get on and meet each other. We want to see your faces. So, if you're going to be out in your bed, you said cooking, if you want to be home, we want you to bring your cigars. We want you to bring your water, your juice, your wine. We're going to sit here and just fellowship. I'm going to say fellowship because we're going to be having club music playing. And we're just going to meet each other and greet and talk and laugh. We're not doing no business. Ain't no Forex business going on there. It's just about us, a nation, a team coming together just to get to know each other better. So, and release. So like I said, bring your cigars, bring your wine, bring your the juice, bring your water, bring your soda, bring your pleasure. Saturday at 3:00. The link is up. I will reshare it again. Hope to see you all there. Matter of fact, bring your friends that you have not seen that are part of this group that haven't been on here. Reach out to them, snatch them, and tell them, look, get on, because we on here having a party. We having a New Nation party. Okay? Anything else, Oliver and Cos, before we close out?
No, that's it, because I got to get on this church thing.
Okay. Bola, you have anything to say before we close out?
No, I don't. Everyone be blessed and have a good evening.
Everyone else is off. Okay. Everyone have a good evening and good night until we meet again. See y'all Saturday at Super Fun Day.
All
I
right.
will see your faces, so get your little clean cuts and everything. See you then.
All right. Peace.
Peace.